Hello, today is the 6th day of October 2016, and welcome. This is a Silver Charts channel, but the charts on this video will be on the dollar instead. Not the dollar index, but the actual dollar, the paper rectangles. Maybe you got four quarters that are 50 years new, and what do you get out of it? Well, in this case, I'm going to show how the dollar has done against gold and use the measurement of milligrams for a US dollar is only worth a little under 25 milligrams today. That's an extremely small amount. That's a quarter of 10% of a gram, and a gram would be a very small coin. Back in the day, though, it was 1,500 back in here, or a gram and a half. You have a dollar, maybe you're traveling and go to a lodge, you put the dollar on the desk. Can you accommodate me for the night? You would ask the clerk, and well, they oftentimes would. Today, you take that $1 bill, go to the hotel, put that bill confidently on the desk and say, will you accommodate me tonight, sir or ma'am? I don't know, are you kidding? Might be something they say. Is this a joke? Because maybe the currency's a joke. It's lost 98.37% in the last 100 years. You can try bringing that $1 to the hotel, but you're probably not going to get much out of it. Maybe a soda out of the machine. I don't even think so for that anymore. However, it's lost that. Now, explaining the movements of this chart, if you're not aware, back in this day, gold was actually money. It was in your coins. It was in your dollars, which were certificates for those coins. Then all of a sudden, in I think 1933, the United States president announced that it's illegal to own gold. Your certificates and gold bullion and your gold coins must be turned in for a little under $20 an ounce. And then when they turned it in, oh, it's 35 now. But hey, thank you for turning your gold in during this time. Then in the late 60s, the United States announced that they were temporarily going off of the gold standard. And then the gold market started moving like a normal market would. And I guess the word temporary on that date means at least a half a century. And of course, the market's moving. So that's how it's been going, but 98.37% down. For money to be such, it needs to have a store of value, and that's practically the opposite of such. It's like saying, if you want to go somewhere where it's warm, may I suggest going to Antarctica in July? It just wouldn't work, and I don't suggest that. Switching the time frame off to the quarterly, going over the last 25 years, obvious store of value on your currency when it lost a bunch more throughout the 2000s. But here's your current correctionary phase for about 4 years shown, which it is a reverse gold chart, but it does show clearly how poor the US dollar has done. And if you don't believe me, bring that dollar into the hotel and ask to get served. But going back to business, there's a lot of times deflation before hyperinflation, at least. That's what it seems to be on a historical level. Would that be a move up to this point here before it just crashes down? Maybe. Is this entire sideways movement part of the deflationary cycle in itself? Again, maybe. And then when you look at the Dow Jones priced in gold, another thing where it's been going down for several years as part of the deflationary cycle. I don't know about those kinds of things, but I do realize that the information of the currencies, they never existed in anywhere near terms like they do today. It wasn't in your economic textbooks or when you went to Harvard or Yale or whatever school. They didn't teach you those kinds of things. And they don't teach you that today, but at least I don't think they do. But it is available on the internet, and a lot of people are aware. When you go to the Facebook page of the Federal Reserve and read the comments that are on there, They're magnificent. People are aware, and more people each week, each month become aware of the fraudulent system. And when such occurs, then there's going to be no choice for the continued loss of the purchasing power of an asset that really isn't such in the US dollar on a tangible level, of course. Bye bye.